Hey all, welcome back to the channel. This is a private equity session 15 session on interview question. So today we'll discuss on the asset write down. Imagine investing millions only to watch it out like a vanish overnight. That is a brutal reality of the asset write down. And today we are breaking down why it's happened in private equity. Welcome back to the channel. We are serious about the private equity, finance, or just love learning how big money moves that hit the that hit the subscribe button. Because today we are driving into the asset write down and their impact on the private equity. So first we'll discuss about the what is write down in the private equity. So what is a asset write down? It is when the fund adjusts the value of the asset downward because of the bad condition, circumstances, or maybe the inflation, or maybe recession, poor performance, or we can say some other factor, economic. In simple term, they once thought it was worth X, but now it is worth Y, and the gap is very huge. The impact on the statement as well. Why it's matter? So, in accounting statement or income statement, because of the write down recorded as a loss, that's why it impacted, and balance sheet asset value drop, dragging to the fund NAV as well. So, it directly impact to the NAV as well. So, there is some accounting exception. Yes, there is some accounting exception as well. So here we can say it get interesting. Just IFRS, you must write down an asset if decline is there. So in IFRS there is some rules, or there is some content will be there, then you can note down here, write down as well. But if it's just a temporary drop, or you might not have to, this give firm more flexibility, but also raises eyebrow when the firm avoid write down for a long. If for short period, and your asset is declining, if you not write down, so it will be the serious impact. If is running for the long time like 6 months or 1 year, you should mention in IFRS that we are writing down our asset. So we have a real example as well. If you think is just a theory, think again. The SoftBank Vision Fund has a write down millions after WeWork collapse. So when what was once a unicorn turned into the financial disaster, and the write down shock their balance sheet as well. So this is a real world scenario. Also, this happened with the two things: SoftBank Vision Funds with the several investment, WeWork resulting, and the financial disaster will be happen. So we come across the example as well, how it's impacting, how the balance sheet will impact. So a PE firm invests into the tech startup, but startup fails to meet the revenue target. The fund may write down the value of its investment to reflect the true market value. So a PE firm invested in a startup with the valuation, with the fund stake of the 25%, and investment is 25%, 25 million. So by investing 25 million, 25 stake they get, and they invest startup valuation is 100 million. So after some things will be happen, or recession, or due to market condition downtrend, the valuation of the startup came down to 60%. Fund stake is elsewhere, but the fund value that they invested is 15 million only. So write down of the 40 million, and there is fund stake no reduce, but the investment reduced by the investment amount reduced to the 10 million. So what is the conclusion on this part? The valuation get down due to the asset value get down. The PE firm initially invests in startup value at 100 million, holding 25% of stake, means 25 million in investment value. The startup underperformed, and its valuation dropped to 60 million, reducing the fund stake value to the 15 million. The fund write down the investment by the 10 million to reflect the true market value. So this is how they have to reflect their balance sheet, their valuation, quarterly basis or yearly basis according to their PE firm, how they invested in this. If this is continued, they have to mention in the uh, IFRS section that they are downtrend, and accordingly the procedure will be go over. If you need more info on this part, you can directly comment on this video. Thank you so much for watching. We'll meet you on the next part. Thank you.